for an expense of about $1,000 per month, the damage that a fraudster can cause to businesses is like upwards of $2.5 million.
I mean, those numbers are staggering.
Not all businesses would be investing enough, especially if their competitors are not doing the same.
Deepfakes aren't the biggest problem in identity fraud, though.
I probably wouldn't pick it for a professional career.
Definitely. I mean, the political side is scary, right?
We say we use AI to fight AI.
Do you think there is a bright side? Hello, and welcome back to Series 2 of What the Fraud, a podcast by Sumsub where digital fraudsters meet their match. I'm Thomas Taraniuk, currently responsible for some of our very exciting partnerships here at Sumsub, the global digital verification platform helping to verify users, businesses, and of course, transactions as well. Today, we have a very special episode for you as we've invited a guest into the studio to discuss the findings of Sumsub's annual identity fraud report. Each year, Sumsub publishes a deep dive into global identity fraud trends, analysing millions of verification checks and examining over 3 million fraud attempts over the past year. And on top of that, we've surveyed over 1,000 end users and talked to more than 200 fraud risk professionals to paint a complete picture of what's happening in the world of fraud just for you. Our report at Sumsub is not just another set of statistics. It's a trusted resource that has been referenced by major organizations, Interpol, Statista, the Evening Standard, the Wall Street Journal, Microsoft, CNBC, and so many more. And it underscores the real scale of global fraud and the real impact, and how businesses and policymakers and yourselves can stay ahead. So let me introduce you to our guest, Sumsub's very own Chief Growth Officer, Ilya Brovin. You may recognize Ilya as he's been one of our external representatives who travels the world speaking at various industry events. When Ilya's not busy doing that, he plays a pivotal role here at Sumsub, guiding the company's product strategy, launching new initiatives from the ground up, and orchestrating investor relations. With a strong background in finance, his experience in investment, private equity, and tech-driven financial services is super valuable for us. Ilya, welcome to What the Fraud. It's so great to have you here with us today. How's everything going on your side?
Thank you, Tom. It's a pleasure to be here. It's going good.
That's great to hear. Let's start with some context for our listeners. What's the main purpose of the Identity Fraud Report? And what has Sumsub uncovered this year?
So we monitor users' behavior from the time they onboard with our clients all the way to the ongoing interaction. We try to protect at every step of the user's journey. So we know how tricky it can be. And there are lots of different fraud types that are happening in different industries, different locations. And we do see a lot of those happening as we are helping our clients to protect against this. So we wanted to share in this report the latest fraud trends. We wanted to talk about the defenses that businesses can have around it, and that's why we divided our report into two main sections. Offense, i.e. how fraudsters attempt to conduct their fraud, as well as defense, how businesses and individuals can protect themselves from it. And so we obviously wanted to share a lot of the data that we see throughout our work.
Amazing, Ilya. So we both read the report, and I mean, from my perspective, it's much more detailed than 2023's. So without giving too much away, Ilya, can you share some of the biggest areas of change you've noticed compared to last year's report?
Sure. I think the first thing that comes to mind is that, fraud is no longer limited to just professionals, right? To expert criminals. It's become much easier to conduct, and we'll talk about this later. And also deepfakes are now part of everyday life. They now account for about 7% of all types of identity fraud, which I think is a huge figure actually for a type of attack vector and technology that's kind of really been available to mass market for just over a year.
Most definitely.
Something that we've talked a lot about, but again, this is something we see a lot. Fraud doesn't stop at onboarding. Onboarding is just one part of the journey where fraudsters can conduct their illicit activities, but actually the whole purpose of what they're trying to do is to get into a business or to get to conducting their fraud after they've onboarded. And that's why we're emphasizing the focus on ongoing monitoring. And last point is probably around the change in attitude, especially from regulators to fraud, and shifting the regulatory responsibility and financial responsibility for the effects of fraud to businesses that can actually do something about it.
Got you. You mentioned some insightful numbers there, including the 7% for deepfakes. But one figure that stood out for me was the 67% of companies which reported a fraud increase from 2023 to 2024. So why do you think that fraud continues to rise so steeply in this case?
Right. Look, I think there are kind of three main factors to think about. One is what you can call the democratization of fraud. As I mentioned, it's become way, way easier for almost an everyday user to do something fraudulent, to create deepfakes, to use certain tools and technologies available very easily and quite cheaply. So the proliferation of fraud attempts is certainly on the rise. The second, I think, is just the overall trend that we see towards digitalization of pretty much every type of service. And that just means that the field for where can fraudsters operate is becoming much, much wider, and pretty much in some areas that maybe before weren't really so much online. And look, still there's, I would say a lack of digital and security hygiene on the side of consumers for sure, businesses as well. It's certainly helped this trend by the trend towards more and more services and businesses being online. So it's becoming more and more complicated to actually be secure, right? So not everybody uses multi-factor authentication or uses strong passwords. So those are the kinds of things that are pushing fraud up.
Okay, got you. Well, do you think education is a double-edged sword? Because we're talking about democratization of access to these services. So fraudsters are getting educated, but also the individuals who are maybe on the defensive are not getting educated enough to clean up, let's say, their protective measures.
Look, education is a major factor in reducing or controlling fraud rates, for sure. But as I said, there's becoming more and more of what you need to do to protect yourself.
Yeah.
And it's kind of hard to stay for an average user, or I would say an average business. It's harder and harder to stay ahead of the new trends in fraud, because it's always a tug of war. Fraudsters are creating new techniques then businesses, with the help of companies like Sumsub, need to try to tackle. But yeah, making sure that people are aware, and businesses as well are aware of what's happening, what needs to be done, how do you need to educate your employees as well as your consumers, users. Yeah, that plays a pivotal role.
Absolutely. So I agree on that. We've discussed a few points like that in previous episodes, but would love to address the fraud as a service aspect of this. I mean, fraudsters seem to be treating their operations almost like businesses, like these enterprises which they're targeting and trying to go after and circumvent their, let's say, their fraud barriers. So they're also investing in tools, infrastructure to scale their activities. But why has it been so easy this year to get started? And what makes the fraud as a service so appealing to them?
Yeah, look, as I said, fraud has become way, way cheaper to execute. Nowadays, you can pay, a few dollars for an app that can create deepfakes, realistic deepfakes with images, video, voice, so that's democratized access to fraud tremendously. Then you also have technology reaching regions with lower levels of income and less economic stability, that basically pushes more and more people from those countries to participate in fraud, as this is quite a lucrative activity for them individually, as well as for people who organize these networks. So speaking about networks, more and more fraud is actually not done individually by a single fraudster, or even like the fraud itself is not an action of an individual person. We see more and more fraud rings or fraud networks, multiple people being engaged in fraudulent activity. It's much harder to detect. But yeah, so it's become much easier to organize people across different places to participate in fraud in an organized way.
Yes.
And, just in terms of, give you an example of economics, we've estimated that for an expense of about $1,000 per month that you've spent on conducting fraud, the damage that a fraudster can cause to businesses is like upwards of $2.5 million. So it's a huge ROI in financial terms, right? Yeah. And obviously this means that a lot of people are lured into participating in that activity. So
Definitely, definitely. I mean, at the end of the day, there's a lot of businesses that I know which are trying to make access to digital services more equitable. But when we're talking about making access to digital fraud services, like creating IDs, like creating deepfakes more equitable, I think it's a double-edged sword. It's a bit difficult to sort of combat that, right? But I would love to move on, Ilya, to maybe examine the types of fraud identified in the report. As I mentioned, ID, deepfakes, and you discussed earlier. Why are they becoming so common?
Well, one factor is, as we discussed, the easiness of access to technology that can create those deepfakes. That's one. The other thing, I think it's quite interesting. You can believe what you see. If you can see something, then you know it's happening,
Good old days,
right?
yeah.
Yeah, and so I think if you bring that into the online world, until the proliferation of technology, that used still to be the case. And that's why, for example, in Germany, when they develop laws about remote identification, they rely on live video interview. And so it's the fact that seeing a person live creates the sense of trust, why I think the fraud is moving that way. Because if you now can defraud that, what does prove who you are? That's the kind of the ultimate truth. So I think that truth is no longer valid online, right? What you see is not not what the truth is. So, but that's why I think there's so much focus from fraudsters on this area of faking, personalities effectively, and so we see that deepfakes rising globally in many regions and countries. South Korea leading at 735% growth year on year. So, and by the way, deepfakes are not only a topic in financial services or financial related fraud. It's also part of media, public opinion, especially. It affects elections, and
Hugely.
we've done some surveys, and there are in many countries, over 80% of people think that they are concerned by the effect of deepfakes on the election integrity. Again, for the same reason, right? People, if they see somebody moving, talking, saying something, they believe that that's true. But now it's not. So yeah, that's what I think the main reasons are.
Definitely. I mean, the political side is scary, right? Especially now that we've gone through the elections and we don't know how much has been impacted. Deepfakes aren't the biggest problem in identity fraud, though. Fake documentation makes up about 50% of cases from what we've seen. Fraudsters are experts in creating these documents now, it seems. You mentioned the democratization of access to these softwares, these technologies for minimal prices and maximum ROI. So what trends, other than what we've discussed, are consistent with last year's report, would you say?
Yeah, look, you mentioned documents. Obviously, that's the main fraud vector. There are technologies to not just augment documents and change photos or text on them, but actually create fully synthetically generated documents. There was a quite known case of a website called Only Fakes, where you can, for $15, create, I'm not sure it was unlimited or a large number of fake synthetic documents, which are quite hard to detect for systems that are not yet ready to detect that, right? So that's why you actually need a lot of traffic, and you actually need to see a lot of fraud to be able to catch the fraud. So yeah, for sure, document fraud remains the leader. Another type of fraud that is quite prevalent is chargeback fraud. It's a type of first-party or friendly fraud when people are objecting or refusing to acknowledge that they made some transactions. So that's a big type of fraud, which is actually quite hard to detect. It's not so much about identity fraud, but certainly we've figured that over 50% of businesses face this type of fraud. And account takeover is probably the other very prevalent trend. And that's, by the way, one of the types of fraud that you can only monitor, post onboarding, right? Because somebody has created an account, but then somebody has stolen it. Somebody else has stolen it. So you need to really understand what is the behavior of the original user and how it's different from the behavior of a fraudster to be able to detect it.
I mean, let's say organized operations like fraud networks, money muling, often involve groups executing coordinated attacks together from the point of view of targeting multiple platforms and, of course, diverse industries on a global scale. So, Ilya, I would like to ask you, why are we seeing more of this, and what can we do on the defense side that we discussed earlier to stop it and protect these businesses?
Well, let's first talk about why. I think at one point I mentioned, obviously, technology access in lots of less developed countries meant that it's much easier to involve and engage individuals from those countries in this type of behavior. These attacks are also much harder to detect especially at onboarding stage, as we discussed before. And so that's why fraudsters also want to use them. So because a lot of times they involve real people onboarding with real documents. They're just effectively selling their accounts, for example, right? And we've actually found that in the first quarter of this year, about 1%, so 1 in every 100 users was involved in some sort of a network. And so I find it a staggering statistic, actually. It might be obviously skewed by the client base of our clients, the user base of our clients, but still we see a lot of that. As I said, they're very hard to detect at onboarding stage because there's real people. And especially they're prevalent in such regions as APAC. So 7 out of 10 countries that are most prone to being involved in fraud networks are in APAC. And so one type of those fraud attacks is money muling, and i.e. when a real person creates an account with their own documents, but then they let somebody else use that account. So that will remain a dominant strategy. But funnily enough, or not funnily, it's not just people from developing countries that are selling their KYC credentials. We see that happening in developed countries as well. So the only way to fight this, as you mentioned, is to actually monitor the user behavior or account behavior in that case, because you don't know then who is doing that after onboarding. And that's where I think that's where the industry is moving, because you need to piece together systems that look at the individuals when they're onboarded and then at their activity after onboarding. That's why when we are building our products, it's all built on the same platform. So any data that we have about an individual from the time of onboarding, we can use that data natively when we monitor their activity, and that opens up the possibility to detect those fraudulent networks, because you can connect users both at the time of onboarding, but in particular at the time of transacting, with seemingly unconnected facts. It can be their device fingerprints, locations, even selfie templates. So lots of ways to piece together seemingly unconnected individuals. We can do it across industries, across countries, and across clients, obviously. Because fraudsters operate, as you mentioned, across many industries and verticals, and they attack at the same time multiple clients. And so that's the only way to fight it. But as we said before, it's a tug of war, right? They create something new, you have to develop tools to fight that.
Definitely, and definitely the case. I would say, especially with our solutions as well, Ilya, when we're looking at piecing together all the information, it's great to have it from a bird's eye view, but being reactive with it as well, where you can, based on triggers, conditions, actually set up behavioral events, triggers that say, look, you do a KYC again, do a bank card check, because we've seen a ATO or account takeover suspicious check. I think that's super important. But on the first side of your point there, you did mention APAC as a high-risk region, right? Fascinating to see that in the report and the industry insights, of course. But can you tell us a bit more about what makes this region particularly vulnerable to these attacks?
It's a big region. There are countries with lower levels of economic development and government control, economic stability. And also, it's quite digitally savvy, actually, because lots of countries in that region jumped through, a couple generations of development of financial systems to something that is mobile first, remote first. And obviously, those two factors create sort of a very fertile ground. Fraud is growing around the globe. So some of the numbers that we have in the report, so Europe, 150% growth, APAC, 120% growth. Africa is leading at almost 170%. LATAM, North America, they're all growing at sort of 120 to 140% growth. So that's something to watch out. But obviously, regions with less economic stability and resource availability are more prone to be involved.
Definitely the case. I mean, those numbers are staggering, Ilya. Of course, you know that we do work across so many different industries: mobility, marketplaces, banking, fintech, payments, all the way to crypto and iGaming, of course. But these sectors are different. I say different in the way that some are hit harder than others in terms of fraud. So would you be able to help me break down which industries are most targeted and why they might be most exposed to identity fraud?
Yeah, look, the statistics that we show in the report for 2024 is that dating is the number one vertical affected by identity fraud, closely followed by online media, so about 7%. So dating was about 9%, online media about 7%. Bank, insurance, video gaming, crypto, transportation. Overall fraud growth rates were in dating were 265%. So, that's more than 3.5 times. Online media, 180%. So why? I have my view. Look, in financial services, there is regulation, and there's somebody that is requiring businesses to conduct certain types of checks. But all the times that's not present in these non-regulated segments, like general online media as well as dating. And so whereas in financial services, you have maybe a compliance officer, somebody that is expecting to be potentially defrauded and therefore on the lookout. And they are a professional, trained professional. Whereas in media, dating and online media, people are not suspecting that might be defrauded. They're actually in a very vulnerable position. And that's why we see romance scams being a very, very prevalent trend. I've actually given an interview to CNBC about the same topic around February, which is when we observe a big spike of this type of fraud happening. Online media, which involves streaming and social media, is actually very much susceptible to that as well. But there are different types of fraud. So a lot of times in online media, so it's streaming services, you see friendly for a fraud, first-party fraud, people sharing their accounts, abusing maybe some types of benefits or like sign-up bonuses that may be presented, which also, by the way, is very much connected to fraud networks because that's done by groups of individuals. So those are probably the two biggest sectors. Banking and insurance, as always, remains, and fintechs remains a big sector. That's because that's where the money is.
Ilya, great to sort of touch on the points around the offense factor, all these industries being targeted perhaps separately and some regions maybe being more susceptible. But I'd also like to touch on the defense aspect highlighted earlier. With fraud now on the rise, I mean, what can companies do to protect themselves at the end of the day? And what would you recommend as like a key strategy to help them protect themselves?
Great question. I think we highlighted this in last year's report, and again, this trend we see in this report. Majority of fraud happens after onboarding.
Yeah,
I think point number one is whatever you do at onboarding does not protect you fully, and so yes, you have to do very thorough onboarding checks, KYC in case of regulated institutions, but that's the first step, so to say. You have to also look at users' activity and behavior afterwards. And as I mentioned, the crucial piece is connecting those two and being able to see patterns, data, and reuse that data and kind of have a 360-degree view of the customer and of their activity in real time as well. There's obviously a cybersecurity angle to this. As more and more businesses and transactions move online, there's just pure cybersecurity fraud that can be happening. So you have to connect those pieces around compliance, fraud prevention, as well as cybersecurity. Finally, you need to make sure that both your employees as well as your users are educated and trained properly to be on the lookout for the types of fraud.
Most definitely. I mean, education, as we mentioned earlier, is a super important part for employees and the general audience, the audience listening here today as well. But what could you tell me on the regulatory side? You touched on it a moment ago. Are there any changes from 2024 to 2025 that our audience should be aware of?
I think that what's interesting is that, so if we touch, for example, about fraud specifically and losses that people have a result of fraud, it used to be that it will be either the individuals themselves or maybe the merchants they're dealing with that were responsible for bearing that fraud losses. What regulators have recognized is that actually the financial institutions that are enabling payments
Yeah.
are in a position to protect and to control that much more. And so what we've seen is in a number of countries, regulation has shifted that burden of financial responsibility to the financial institutions involved. And so, for example, in the UK, from just, I think, October 7th this year, so very recently, this new law started to work where banks and payment service providers have to compensate up to 85,000 per person in fraud. And there are some types of fraud that are very hard even for the banks to detect, for sure. Like APP fraud, for example, is when a user was maybe defrauded into giving their transaction confirmation codes, for example, for a bank. They don't necessarily see what's been happening behind the scenes, but the fact that they now are responsible for that type of loss will focus their attention on preventing it, which I think is actually a very prudent move. More generally, EU has implemented EU AI Act. It's not specific about fraud, but as AI is used more and more in defrauding as well as in fighting fraud, and how AI is used in these systems and how personal data is protected in that case, I think that's a very big topic. So having a regulatory framework in which you can build your systems, I think that's very important as well.
Do you think these regulations or the work that these regulators are putting in will be enough, Ilya? Or do companies need to go above and beyond what's required to remain protected, both themselves fiscally for the bottom line, to keep their licenses, but also to protect their user base as well?
Well, regulation is never the end goal, right? It usually establishes the least common denominator, the minimum level of what you have to do to protect your users. Obviously, businesses, they care about their reputation and their long-term viability, will be proactively investing in systems and doing, as you said, and going above and beyond what's required in the law. But nevertheless, I think, in some cases, regulators need to get involved and change the rules and create the right incentives as well. Because look, in a competitive world, not all businesses would be investing enough, especially if their competitors are not doing the same, if it's not required. So I think having the level playing field for everybody is actually a good thing.
So, Ilya, there's a lot of measures that companies can put into place. And obviously, the regulators are setting the very basic baseline that they should do. But in saturated markets, when we're looking at iGaming and iGaming, gambling online, or fintech, where the stickiness is really, really essential, when a KYC journey is a little too long, customers may jump off and go to the next best alternative as a solution or digital service. So how imperative is it for a company to choose measures which would protect their users and the company versus making it short and sweet to obviously onboard as many users as possible?
Great question, and it's a business decision, obviously for any business. But we're sometimes talking about KYC or onboarding times of seconds, 10 seconds, 20 seconds versus 50 seconds. In reality, I think there will be a shift in focus from the easiness in just focusing on conversion rates to much more, not even so much compliance, but robustness of the systems from a risk perspective. There are lots of methods and ways to identify individuals securely that don't require more friction. Actually, some of them require less friction. So if we talk about, say, non-doc methods, where people can be identified via records in government databases, and they don't need to provide a document, actually that journey a lot of times is much simpler. You don't need to scan your document. You're not at the risk of having poor lighting or, bad connection, something like that, right? Glare on your photos. That you're not being asked to retake these photos time and time again. But actually you're authenticating in some service that is very familiar to you, because that's the other angle of it. All of these non-doc methods are local as opposed to global. And therefore, if you are from that location, you're offered that method, you know it, you've dealt with it before. So a lot of times it's sort of a win-win situation. It's faster, it's more convenient, more secure, and it's more trusted by users. So I think it doesn't always have to be that security means more friction. Sometimes it can actually mean less friction.
Amazing to hear. Looking ahead, Ilya, we talked about a lot of these trends now, but would you be able to give our audience a summary of what trends you see as companies and consumers need to look out for?
Look, I think actually the trends will be sort of a continuation, expansion of the trends we've seen actually over a couple of years. Obviously, we've talked about AI and deepfakes being a big driver of fraud. Hiring money mules will continue to be sort of a very noticeable fraud vector. And but also lots of attacks will become more and more hybrid, involving more than one attack vector, and therefore will be more and more difficult to detect. So I don't think there will be something groundbreakingly new, but I think the proliferation and the complexity of these attacks will become much higher.
Definitely the case. But do you think there is a bright side? I mean, there's a buzzword here that we just keep throwing around, AI, right? But it is being used more and more for the defense methodology, which we discussed. Are you excited for companies to be using AI to combat fraud more frequently?
Yes, absolutely. Look, we say we use AI to fight AI, right? And that's that same tool gives you a lot of power to detect fraud violations in real time or near real time, and be very accurate, and also do it much more efficiently and at scale. So for sure, at the same time as providing tools for fraudsters, it provides tools and defenses for the businesses. So that's one, I think, bright side. I mentioned the acknowledgement that businesses need to move to using more secure methods, which can actually be simpler and more secure, like non-doc identification. So I think that is much, much more being asked by clients of ours. I like that. And the last one, we talked about regulation. And I think the fact that regulators are recognizing the effects of this fraud and how big of a societal issue effectively it's becoming, and they're focusing on this and introducing regulations to create a level playing field and a minimum standard of protections for consumers and businesses, that I think is a good development as well.
Great. Thank you, Ilya. All very, very important points to take on as the audience, and of course companies which are protecting themselves not only today but in 2025 as new trends arise, new fraud methods need to be implemented, and of course new regulations set a new baseline. So Ilya, what an episode. Thank you for joining us today.
Thank you for having me.
Our pleasure, really. We do have one more thing to cover, which is the quick fire questions. So these are going to be a surprise, and I'm looking forward to these.
And they are a surprise?
They are a surprise. So when choosing a digital wallet, do you go for more features or better security?
Probably security.
It's got to be security, I think, as well. But number 2, strong passwords or biometric authentication?
Both.
Both? No, you've got to pick one.
I like biometric. It's very secure. The passkey functionality, I've been transferring everything through that.
Makes it easier. I think secure as well. Is online fraud more about technology flaws or human error?
Again, both. Yeah. But I think technology allows to exploit the human errors.
Definitely the case. That's a good answer, actually. What's one habit you rely on to stay safe online?
Very good question. I accept the fact that there's a lot of fraud happening you'll get hacked and stuff. And so I just basically try to separate what needs to be secure and keep it secure, and then the rest you just have to sometimes take it as a fact of life.
Yeah, there's too many accounts, just copy the same password, even though it's a bit risky. But if you could have any other career, Ilya, other than the one that you're currently in, what would you be doing? I've heard pilot, I've heard other things before, but
I did want to be a singer when I was a child.
But right now you still want to be a singer?
I probably wouldn't pick it for a professional career. But yes, that's probably music is an area that is very close to my heart.
Classical music, so I
Different kinds of music, but classical, I like classical music, yes.
Fantastic to hear. Well, thank you, Ilya. All great answers, I think.
Thank you.
Pleasure. What a great episode today here with Ilya from Sumsub. I would like to touch on a few of the key, let's say, outputs of today's discussion, some of the highlights which I've noticed. On the attack side, we've discussed everything from a very industry-specific approach, where some industries from our report have considerably higher levels of fraud than others. So we mentioned online media, dating services, of course, but also this is geographically diverse, from APAC leading the charge in terms of a lot of these fraud cases. But AI, of course, is increasingly being used on a global scale to combat our systems, to combat businesses, let's say, compliance frameworks and fraud frameworks. And with that, we are seeing a massive increase in APP fraud, chargebacks, and a lot of other issues such as account takeovers as well. So not only is this offense happening on a localized scale, it's happening within criminal networks. So fraud networks is a requirement now to make sure you are spotting who is attached to who's connected to who, and where is the relation on the data side. But there's always a hybrid approach. Businesses are often attacked all at once, and they're attacked from multiple angles to spot any weaknesses. So I would say to businesses listening, do not sacrifice robust compliance frameworks for quicker onboarding. Do it smarter, and of course, do it with Sumsub. Thank you for joining me today on What the Fraud. I hope you've come away with loads of actionable insights to protect your business and your organization from rising fraud trends in 2025, and of course, beyond. As always, we'd love for you to like, comment, follow, and subscribe. Any feedback you give us is incredibly helpful and also makes it easier for other people to find us. And of course, if you want to hear more about what we do here at Sumsub and how your business can benefit from our verification services, definitely check out our website at sumsub.com and subscribe to all of our socials.